All right, problem 2-2A. On this one, on October 1, 2016, Jay Crawley established Affordable Realty, which completed the following transactions during the month. And just like before, I have copied the problem into the Excel file under the tab problem 2-2A, and then my solution is here. Once again, in the right columns, a ledger page to record the transactions, A through I, and then a series of T accounts to post those transactions. So, transaction A is Jay Crawley transferred cash from a personal bank account to an account to be used for the business in exchange for common stock. So cash is the debit and common stock is the credit, and the amount was $40,000. B, paid rent on office and equipment for the month, $4,800. Rent expense, and we paid it, so that indicates cash, $4,800. C, purchase supplies on account, $2,150. D, paid creditor on account. So this is accounts. Paid, indicates cash, $1,100. E, earned sales commission receiving cash, $18,750. F, paid automotive expenses for the month, $7,580, and miscellaneous expenses, $800. So automobile expense and miscellaneous, and we paid it. So the automobile expense was $1,580, another $800 is a total of $2,380. G is paid office salaries, and we paid it, so that's cash, $3,500. H, determine that the cost of supplies used, so supplies expense and supplies, was $1,300. And then lastly, I is paid dividends, of $1,500. Debits equal the credits on the ledger page, $75,480. So starting with A, cash and common stock, rent expense, C is supplies. And that was on account. Oops. Then we paid off some accounts payable in D. Received our sales commission in cash, E. F, we paid automobile expenses. Oops. Miscellaneous expenses. And we paid cash for them. Office salaries is G. Paid cash. Supplies expense is H. And then lastly, dividends is I. Totaling up the cash credits and the debits, we get a balance in cash equal to $45,470. Supplies equals $850, and everything else, so except here, accounts payable is left with a balance of $1,050. And then from here, we could go on. And so this is affordable. Realty. The income statement. For the month ending October 31st, 2014. We have sales commissions. Expenses are equal to office salaries, rent, automotive, supplies, and miscellaneous. So office salaries were $3,500, rent was $4,800, automotive was $1,580, supplies $1,300, and miscellaneous $800. Sales commissions equaled $18,750. Total expenses equaled $11,980, which gave us net income of $6,770. The statement of retained earnings also for the month ending October 31st. Beginning retained earnings was 0. To that, we're going to add net income. Which we just calculated. Less the dividends. Giving us $5,270 in ending retained earnings. The balance sheet for the month, no, it's not for the month ending. It is as of October 31, 2014. We have assets equals cash and supplies. Cash amounted to $45,470 and supplies equaled $850. That gives us a total for total assets liabilities we only had one. We have an accounts payable with a balance of $1,050. Stockholders' equity equals the common stock of $40,000 and retained earnings which is calculated above at 5,270 for total stockholders' equity. And total liabilities and stockholders' equity of the same $46,320. And that gives us our financial statements of the income statement, the statement of retained earnings, and the balance sheet. So all of that can be done from scratch. Ledger, analyzing transactions, classifying those transactions into at least one, possibly like in the case of F, more than one debit and credit, posting those individuals to the account ledgers, which are the T accounts, and then taking the balance of those T accounts to create our financial statements. All right, I'll post this and we'll be set for chapter